Well, hello there and welcome back to Sibos TV. I'm Daisy McAndrew, your host for the rest of this week here at the Boston Convention Center. Thank you so much for joining us this afternoon. Well, we are now talking digitization of commerce. I'm delighted to have three expert panelists alongside me. To my immediate right, welcome to the program, Ashley Sconild, SDocs. Thank you for joining us this afternoon. Pinaki Roy on my left, thank you for joining us. You're from Reliance Industries. And Vivek Gupta from ANZ. Hello to you. Very interesting subject this. Maybe I can come to you first, Ashley. How are you seeing electronic commerce grow in the corporate space? What's going on?
We're seeing a tremendous amount of growth at the moment. I think corporates who have invested heavily in their IT infrastructure have wanted to use that IT infrastructure for trade finance purposes and automating their processes and things. At the heart of a trade finance transaction is the electronic, or it's a bill of lading. What we do as a company at SDocs is we automate that bill of lading. So we have a fully electronic BL, which is made up of bits and bytes and data, and can speed up the entire trade finance process. And corporates are really adopting it now. I mean, we've grown tremendously in the last couple of years. We've doubled our growth since last year. We've got double the amount of customers on board. And one of the main reasons is that customers want to speed up their trade finance processes. In the past, it relied very heavily on paper documents moving physically across the world, trying to keep up with the cargo, sometimes not succeeding. Yeah. With a fully electronic transaction set, you can speed that up very quickly. And even if there are errors and banks return the documents, because it's all electronic, it happens incredibly quickly.
And so you can see if things are going wrong.
Exactly.
Yeah.
And so we're reducing the day sales outstanding for companies who are selling. We're speeding up the process a lot, freeing up working capital that was otherwise tied up because of this inefficient process, and allowing corporates to use this technology that they've invested heavily in their ERP systems to connect that in a straight-through processing type scenario to their banks and to the outside world. So, it is what it should be. This is the day of the 21st century.
Your moment has come.
Exactly.
Well, Pinaki, I'd love to hear your perspective. You've flown here to Sibos from Mumbai, where your company, Reliance Industries, is based. What's the digitization of commerce meant to you and to other Indian corporates?
When I talk about digitization of commerce, I'll restrict myself to more trade finance and banking. What Ashley was talking about, this electronic bill of lading. If you really look at it, this digitization is in fact happening for quite a number of years. In the days of yore, if you remember, the LC application is to be made, which is, as we call it, physical. You do a paperwork, goes to the bank, the gentleman copies, prepares something, sends it by the telex. Today, all the corporates, I'm very sure at least 80% of the corporates, even in India, would be using the electronic mail or some kind of e-trade which the bank offers, the bank's platform. And most of these guys are familiar with Swift, these old message types, like for a letter of credit, if it is MT700, they actually structure this letter of credit in such a fashion that when it goes to the bank, the only thing bank has to do is it has to check the data and then sends it. Now, like what Ashley was talking about, that reduction is working capital cycle. I'll say, it's true, but more than that, what the corporates will expect from the banks, it's some kind of a hassle-free services. Like when you talk about letter of credit, you have like these documents which banks often find discrepant. Like you lose number of days. He says money gets tied up, your working capital gets tied up. Now, things are happening. Maybe one problem we have is this electronic bill of lading, because transport document, is a very vital document. I'm sure Vivek could enlighten us on that. So it gives you the title to the goods to the banks. Now, there's one area where even if I can refer to something which Swift is now trying to, talk about a bank payment obligation, which I'm very sure is not going to replace letter of credit. But very sure it's an option for the corporates. Like I for one would be very happy with, there's a lot of adoption of electronic bill of lading. One challenge of like BPO was that what happens to the transport document. Now with companies like Ashley's, or there are other companies who are offering today electronic bill of lading. But in India, you see, we also have this problem. I think it's happening everywhere, that you also have a regulatory aspect of it. Like a bank payment obligation, if is to be implemented, whether it requires the approval of the Reserve Bank of India, the Central Bank of India, the debate is also continuing. So while the corporates would love to have digitization, reduction in the number of days, and banking becomes absolutely seamless, we have the constraints because these are the areas, like, and you have the AML and KYC kind of problems today, which banks are grappling with. Recently, I was in Singapore, where I have seen that, non-banking companies are financing more trade deals than the banks, because banks, I think, have the constraints of either the Basel kind of this thing, or a capital at risk kind of scenario. So like any other corporate, any part of the world, corporates in India would love to have hassle-free banking and access to funds easier than what it is today.
I think hassle-free banking sounds good to all of us, doesn't it? Vivek, from the perspective of the banks and a bank, well, first of all, how would you respond to what Pinaki was just saying there, and how are banks delivering these solutions?
I think the challenges for the banks are many, right? Firstly, I think the regulatory aspect is very important. So it's vitally important, to Pinaki's point. We do stuff where regulators understand it. Second, I think the aspects around operational risk are vitally important for banks to address and understand. That has an implication in terms of how much capital you hold. And third, I think from a regulatory point of view, the whole aspect around sanctions. So it's something that you've got to be absolutely in line and sync with what the regulators want you to do, and have standards that allow us to operate at a level which the regulators feel comfortable with. I think what you're asking from a banking point of view, take a slightly different lens to it, is, see, for too long we've been stuck in the documentary credit, right? And I think 80% of world trade is in the open account space. I see that is where we all need to get our minds clear and a mindset changed to driving growth in the open account space. That is where the future is, right? So I think I would look at how do we make that simpler for customers to understand? How do we jettison our own historical mindsets to be able to set ourselves up infrastructure-wise, capability-wise to get there? And how do we work with third-party providers like what Ashley does and others in the ecosystem to really make it happen, right?
Okay, Vivek, we've got a late arrival to this discussion. Delighted to say that Jacob Katzman has found the time to join us. Jacob, thank you so much. Jacob's from Global Trade Corporations. I don't know if you could hear there what Vivek was saying, but I wondered how you would respond from your perspective to that. And welcome to Sibos TV.
Nice to be here. Can you please repeat the question?
Well, just Vivek was talking about digitization of commerce from the bank's point of view. Pinaki was talking about how we all want hassle-free banking, and how whether electronic commerce is growing in the commerce space, and what you see as going on in that space at the moment.
Yeah, thank you very much. Yeah, what we deal with, we provide software to very large corporations who deal a lot of trade finance business, and what we find is that a lot of them want to have electronic communication with their banks for trade. And of course, SWIFT is now, for many years now, but now it's becoming more mainstream with MT798 messages for trade finance. We find that's becoming the channel, a preferred channel for them to adopt. And you will soon hear announcements from the Fortune 10 company that has recently selected SWIFT MT798 and also selected our technology to communicate with their banks for communication on export documentary credit messages. So these are the messages that banks advise right now through their proprietary systems, or by email or by fax. And they want to receive them electronically from their banks. So what you're going to see is not only that you're going to have more adoption in the space of trade finance with regards to messaging on SWIFT, you're going to also see, once that is the first step, the second step, you'll see them presenting documents electronically, because there's no need today to present documents in a paper form, because the banks themselves, for many years now, examining their documents that they receive through images on screens. So the idea is to make the straight-through processing from not just the advising side, but also from the examination side, which will make the life of corporates much easier and will speed up the DSO, days sales outstanding, will speed up that cash into treasuries that the corporates want.
Actually, I think we can all see that there's a lot of change in this area, but crystal ball gazing time, what do you think the future holds? How much more change will there be?
I think Pinaki hit on it, and it is what we're doing as a company right now. I think bank payment obligations, just completely taking paper out, whether it's digital paper or digital documents of some sort, or physical paper documents, get them out of the entire arena, replace it with data. This is, it speeds up the process quite tremendously, and there's huge savings in it in terms of time for corporates and for banks. It's a very efficient process, bank payment obligations, for everybody in the process.
And what about challenges within this area? I mean, what are the reasons that people would be resistant, Jacob, do you think? Or what are the fears that you might have to allay?
I tell you from the experience I have speaking with banks, existing clients and prospects, whenever we have a new corporate that says, okay, I want to do this, I want to use Swift messages, the first question becomes, so how many banks are doing this? And when you come to the banks, the question is, how many corporates are doing this? So it's like chicken or the egg, what's going to drive adoption, right? So if you have the large corporations, and some of them are sitting here, who are going to tell their banks, definitely, yes, we're going to do this. And if you're not going to follow, we're not going to work with you. We're going to work with the banks that help us do this electronically. You're going to have change. But until you have that, what I call an element of a big white elephant in the room, until you have that big white elephant pushing for change, is going to be resistance because everybody has their priorities. Everybody has their budgets. Everybody needs to get approvals. Whether it's a bank or a large corporate, they need to have a project. They need to have a business case. And for that to happen, whether it's electronic bills of lading, whether it's messaging over Swift, there has to be a solid demand and a clear message that this is what we want.
All right. Well, gentlemen, thank you so much. And Jacob, I'm sorry we didn't have much time, but are you all involved in the panel session tomorrow morning? So if you want to hear more about Jacob's elephant in the room or anything else you've been hearing about that we've been discussing here on Sibos TV, do go along to the panel session tomorrow morning. We'll be back in just a couple of minutes, but right now, that's it from me. Thank you. Well, hello and welcome back to Sibos TV. You're watching Daisy McAndrew, delighted to be your host here in the Boston Convention Centre this afternoon. Well, we're moving on to corporate transaction banking, and I'm delighted to have been joined by George Nast from Standard Chartered. Good afternoon to you, George, and thank you for joining us. Corporate transaction banking has been evolving very, very fast. In your opinion, what have been the main changes in the area?
Sure. So if I just reflect back on the past 5 years, it used to be actually quite an unglamorous business, and that has really changed. It's become very much core to a lot of international banks. We used to have a little joke within Standard Chartered to say, transaction banking has become sexy.
That's a banking joke, right?
That is definitely a banking joke. And the reason why it's become so important is because it's truly one of the businesses that is absolutely core to corporate clients, because transaction banking gets involved in the day-to-day flows, the day-to-day operational activities. So as a bank, it's important because we can see exactly what's going on with the client. It's good for risk management. It creates very sticky relationships. And in the current regulatory context, particularly with Basel III and the like, it generates stable liabilities and very low risk, short-term trade assets that we can invest in. So very good for the balance sheet.
So is it fair to say it's the defining element of corporate banking these days, or is that going too far?
I don't think it's going too far at all. I think it's very defining. A lot of banks can come and do episodic financings for corporates, but fewer banks can be as core to a client the way that transaction banks can be, because you truly see what's going on the day-to-day business activity of the client.
And I know you're based in Singapore and you're heavily involved in emerging markets. What impact does it have on that business?
Well, it really does have a big impact, because in many emerging markets we are seeing the growth of emerging market multinationals. So usually when we talk about multinationals, we talk about Western companies.
And companies that have been around a very long time.
Correct. So now we're seeing companies from Asia, companies from South Asia, from Africa, evolve and becoming multinationals themselves. And they realize that actually having good oversight on their working capital, working with a transaction bank that can help them control their day-to-day finances, give them payment options, help them grow their business by providing short-term financing is absolutely critical as they grow to become tomorrow's super companies, super multinationals.
But if they're growing, if it's new growth, emerging markets and so on, is there a certain sort of fear of new ways of doing things perhaps?
I would say the fear is more among banks than it is among our corporate clients. I think particularly in emerging markets, treasurers, CFOs really do want to compress the time frames that maybe it's taken a Western multinational to achieve growth, expand into new markets. So the bigger challenge is banks like us actually keeping up, innovating along with our clients. So that's where the fear is. It's definitely not with our clients.
It's interesting. It's something we've heard quite a lot this week on Sibos TV with so much technological innovation, of course. Actually it's often the senior management of the bank or of the organization, of the institute, that's resistant to the change, because rather than the clients, or lower down the food chain, if you like.
Yeah, absolutely right. And look, it's something that I think us as banks need to be aware of and learn from. Are there ways that we can be innovative and dynamic, obviously still operating within the regulatory environment and constraints that banks have to operate in?
We've talked about emerging markets, but including or as well as, who are the main beneficiaries, do you think?
So I genuinely believe the beneficiaries are ultimately clients and customers. So if I take on the corporate side, having good transaction banks that provide innovative solutions help them expand their business as they grow abroad. And particularly within emerging markets, if I look on the consumer side, is technology is offering great innovation around reaching unbanked clients. I mean, for example, in Kenya right now, there are more mobile wallets than there are actual bank accounts, just to give you an example of that. So that's the type of innovation that actually expands the reach of financial services to people that haven't been banked in the past. So I think there's beneficiaries all around.
That may well come up. I'm guessing we're all very excited about Bill Gates' keynote speech tomorrow afternoon, but I suspect that's an element of what he'll be talking about, I'm sure.
Yeah, no, absolutely. And I think quietly, slowly, there are banks such as Standard Chartered, others, that are using technology to drive some of the innovation and growth in banking.
Okay, I'm going to ask you to look into the future for me, if you wouldn't mind. Where's it all heading? Where's it going?
So I think, it's very tempting to say there are revolutions going to happen, but I think if you look at the current trends, it'll be more of that. So a lot more technology and innovation that's going to drive efficiency, greater financial inclusion, lower costs to operate. I think that's a trend, that will continue. And I think banks will play a role in that. It's not just going to be the Apple wallets and the like that are going to win this game. It's going to be banks, because ultimately, we have the accounts of corporates and individuals that will benefit from that. What I think will also happen, as I said, is in emerging markets, you'll see corporates becoming a feature of the landscape from emerging market economies. And most excitingly, you will see emerging market currency, I say specifically the renminbi, start to compete with the dollar in terms of a payment currency, in terms of financing currency, as that part of the world becomes much more of an economic force.
Big changes. What about collaboration between the traditional players and perhaps the non-traditional players?
I definitely see that happening. The way that we look at it is the non-traditional players, particularly those that come with innovative payment solutions, really are our collaboration partners, because we have two very common objectives. One is to create greater reach amongst our client base. For example, we work with payments providers to facilitate our clients' payments in Africa. The second thing is it displaces the most costly payment mechanism of all, which is cash. Cash is very expensive for banks to operate on it. These payment alternative providers reduce the amount of cash that is in the system. That's only a good thing for the banking sector.
Well, George Nast, thank you so much for talking us through, and very exciting predictions about the future as well on corporate transaction banking. Really interesting stuff. Thank you very much, George Nast from Standard Chartered. That's it from Sibos TV for a little while, but we've got a very exciting Sibos Spotlight happening here in the studio if you'd like to come over and watch in the next half hour or so, but we'll be back a bit later on this afternoon. Thank you for watching. I'm Daisy McAndrew. See you later. Bye-bye.